Maximus Analysis here for October 24th, 2016. And I have the ES monthly chart up right now, being that we have gone through a very tight range over the last 3 months, which you can see here. Again, wanted to kind of put things in perspective of where we are and where we're going to close the month. I just want to go over the overall picture, start with the monthly, weekly, daily, and kind of work our way down. Again, just focusing on this name right now. So we can see why, again, that the 2100 is a significant level, because if you go back and look at last month's low, you can see that that is a 21.25 level. Again, the previous month, the low was 2141, which it looks like it tested a little bit today. So what I typically like to do is, again, look at what, half back or half of the previous month's range, and kind of just see where that takes me to. And again, they're still below half of the month's range. They recovered a lot back since you can see that the way that this tail goes with last month, that they pushed all the way down and then rallied all the way back up, but are continuing in a sideways movement. Now we'll continue to watch, and then we could actually roll this over so we can see how this stuff is relative to the overall action that we have now. So now let's go down to the weekly time frame. Again, you see the breakout level of 2134 that we talk about a lot. Let's go to a weekly time frame now, just using those same type of levels, and you can see that again we're about 2 weeks up from this low, and they're hitting basically this monthly range per se, or the 2 month back midpoint range of the range. Now we'll continue to watch. Again, you see how bouncy and how choppy it has been since the September 9th flush down. Okay, they've gone down, come up. We'll continue to watch where this is, because again, looking at the time frame, we are, we're about 6 weeks from this low, and it hasn't moved any points. Again, newsletter went out today around 11 o'clock. A little bit different this week. I'm using MailChimp as the delivery agent for the newsletter. So if you don't have it, please look in your spam folders for max@maximusanalysis.com. If you don't have it, please let me know immediately, and I will make sure to shoot it to you and make adjustments on my end. Either way, just continuing to look at exactly what we have going on here. Again, we have a set of higher lows, but we have lower highs as well. So we have a pendant type of action going on between there and there. Let me use the arrow, and then we can kind of see what we got going on here and here. Now let's break it down to the daily time frame, and you could kind of see that we are already, again, I spoke about this on the newsletter. Again, Fibonacci's are not for just retracements. Again, it can go into counts as well. So from this low, we are 1, 2, 3, 4, 5, 6, 7. So if you know your Fibonacci retracement counts, it is 3, 5, 8. Again, one more pop up, and you can see that this price action again is touching the half point of this monthly range, and how this, you basically use these higher time frames to kind of give you a perspective of where you currently are. Now I even went all the way down to a 65-minute, which I wanted to show the wave pattern. Again, I'm not one that really goes heavy into the Elliott wave, because they call people Elliott wave analysts because everything has to be a wave, and it should be used almost like as if you squint your eyes. But this looks like it's a 5-wave pattern currently happening. 1, 2, 3, 4, 5 pattern plus a break above the high. So we could say, okay, and we have our levels that we've been discussing, which is we have 2151, we have 2139.5, and we have 2116.5. They break that to 16.5. They go back to basically the low of the monthly range. And then, after that, there's a reason why they've been protecting it. Again, on the newsletter, I show these levels, which, again, if you watch frequently, you'll see them. But we'll continue to watch how things are going, because this 5-wave pattern is showing us that, again, crude is a little bit tired as well. And again, I showed why we wouldn't have the time frame, but I wanted to kind of break it down because multi-time frame analysis took me a while to grasp what was happening on those higher time frames. But when you kind of incorporate them into the lower time frame by actually marking up the chart with something basic and then going to the lower ones, you can kind of see the significance of these levels. And again, the levels that I use, as well the harmonic levels that I use, the math-based level that I use, work great in conjunction with breaking things down on this time frame. So I want you guys to, again, continue. Again, we're looking at the weekly, and we said that this is be our test, which tested before, and above this we have to remain bullish. But it's not only bullish, but where you get bullish. If you're in overbought or oversold extremes, and not letting, and if you're not in either one, you back off, because right now, again, since the breakdown of 2186, we've been sideways in a painful manner. But again, they're going to wake this up soon, because this volatility is constricting, and once it pops open, you get a violent movement. My bias is due to the downside. I'm still keeping that bias based on the price action that we're seeing here, because I don't have any levels to lean against, and I define my levels. I don't have any levels to lean against to the downside as yet. The closest one I have is 27.97. So they would have to get to that. But right now they're just trading sideways. This is not the time to just be nibbling small trades, because psychologically, again, trading is psychological in so many facets that you got to be able to understand that as well. And I mean, the best traders I know, day traders even, actually more day traders than other things, are the ones that say, no, I'm waiting until my price comes. My price is going to come, and if it doesn't come, I'm fine with missing. But until it comes to the defined place that I want, this is not a trade. So again, I learned from very, very great crude trader that actually, really showed me that why the extremes are where it needs to be. So you have to incorporate that on everything. Again, trading in here is a lot harder than trading in here. Or trading in here. Actually, trading this was kind of hard because it was Brexit. But now we're having the same type of deal. We're having go, stop. Go, stop. Versus, so again, don't let the stopping portion of it get you into a trade that you, again, you'll get mad at yourself. And when the true trade appears, you will freeze because of just trying to avoid pain. Take care. Let me know if you got the newsletter. If you didn't, please shoot me an email at max@maximusanalysis.com. Take care.